So, hi everyone. So, today we have with us Mr. Vijay Parthasarathi, who's a dear friend and an esteemed colleague as well. Now, Vijay is the capital markets partner of Trilegal Bangalore. He has a very diverse and rich practice portfolio encompassing IPOs, rates, quips, rights issues, domestic and foreign bond issues, public debt issues across India. Now, Vijay has advised clients on a wide range of transactions, ranging from defense, financial services, fintech, IT, infrastructure, logistics, manufacturing, pharma, healthcare, real estate, you name it, and he's done it. And some of the select matters which have been led by Vijay are the Ola Electric IPO, Mama Earth's IPO, Coffee Day Enterprises IPO, the IPO of Star Health. These are just to name a few. And lastly, Vijay has been recognized by platforms such as Chambers and Partners and IFLR 1000 for his work in equity and debt markets. So thanks a lot for taking your time out, Vijay, for training these students. And it's a pleasure having you here today.
Super. Thank you, Shashwat. Good to go? Super. Okay. Firstly, yes, I must, before I start, I must thank Shashwat for giving me this opportunity. I know we've been interacting for a few years now. He's been a great help, I must say, in multiple ways, not just one. And I'm indebted to him. I must confess that to all of you. So I'm hoping the relationship will last for long and many more years to come. So I think what we were discussing before I jump into the topic today is the excitement around generally capital markets. What is your sense on capital markets? What should you, as students who are graduating probably in another year or two, what should you expect? As a law student today, capital markets is a field. If that is something that it might interest you guys, you might have heard it from various people. Is it something that you really want to pursue? Then what does it really mean? One is theoretical knowledge, and one's in terms of literal metamorphosis to a law firm, to do a capital market, be a capital markets lawyer. What does it entail? So I want to spend some time just giving you an overview of what I believe capital markets is, and probably use some time to give you an overview of an IPO. Obviously, there are different products in capital markets. The most prominent one being doing an IPO, right? And probably, Shashwat, that's fine. I'll do about 15 minutes and probably keep last 10 minutes for Q&A for people. But if obviously I'm not able to finish all questions, happy for you to compile all of them, share it with me, and I can in some time reply to all of these. Happy to do that.
Perfect.
Yeah. Okay, great. So the way I would want to start is just to do a jog back to my memory, probably 17 years back. I did my law from ILS Pune, and then I did my master's at NYU. I was a fresh graduate when I was interviewed by Amarchand. I had no clue about capital markets. Literally, probably I'm sure all of you on this call are more, or at least are more knowledgeable than I was back then. I had absolutely no knowledge of what capital markets was, what kind of work people do. I've only heard that it's a lot of work. It's a lot of hours. People burn the midnight oil. You need to spend a lot of time. Bit of true, bit of false. It depends on how people perceive that, right? I think as young dynamic lawyers, all of you are, it's a great practice. When I started capital markets in 2007, there were literally 4 law firms in Bangalore on the whole. Today, there are as many as close to 90-100 law firms in Bangalore itself. What I'm trying to get at is just the sheer volume and opportunities for corporate lawyers today in the country, right? And you guys must be thankful to Shashwat. You guys already have some platform. Some of the students I've interacted with through Shashwat, I'm able to distinguish them over another fresher who is a bit more bookish, who don't have the practical experience of what it takes to be in a law firm in a specific practice. I'm sure all of you have internship experience in your fourth and fifth years, and probably sometimes even in the third year, but just to get into actual work. Because what you don't realize is you have to leave that student mindset and be a lawyer mindset. It's not easy, right? When you guys are, the advice to you guys would be, when you're in your fourth year itself, start behaving like a lawyer. You guys are all extremely smart. You guys are all extremely brilliant. You have a personality where you can think from diverse angles, but you need to mentally start preparing yourself as a lawyer when you're probably getting into your fifth year itself. I don't mean to say you need to be arrogant, but what I mean to say is mindset of being a lawyer and getting into what it entails is half battle won, right? Because a lot of people don't realize that I'm still an intern. There will be a senior who's going to look at my stuff. So why should I worry? That sense of ownership should start when you are doing your internships. That sense of belonging is, okay, I have been given a work product. I will do that to the best of my ability. Should start coming into all of you when you're in your fourth year. Probably fifth year, I would assume you guys are already like graduated lawyers, right? So that is very important. The mindset of how you can bring, because as an intern, what we would expect is you are learning something and we are also benefiting from you as being part of our teams, right? So you should make full time of opportunities that come your way and try to be of help for yourself and for the team, right? So that's one part of it. Now, jumping into capital markets, I must say in my 17 years, probably the last 1.5, 2 years has been the most exciting, challenging learning phase in Indian capital markets. You could look at global GDP, you could look at America, in spite of the elections, you can look at China, you can look at Asian markets. Indian markets is the most buoyant and active capital markets in the world today. Why is that? A lot of it is to some extent is a stable economy, and we actually have the right kind of mindset of key industries. Manufacturing, we're doing well. The Make in India concept has helped a lot of companies to do inward as against outward. The reliance on China, on Indonesia, some of the other countries has reduced because India has become more self-sufficient. India is able to manufacture, have the more capabilities which global players are looking at all in India itself. Why am I saying all of this? Some of these factors has led to more active capital markets transactions over the last 2 years, and our assessment is this is going to continue for the next 2 years at least. So for people like you who are all graduating and probably looking at capital markets as one of the option, it's a great phase. I would just close my eyes and say I want to jump into this purely because of the opportunities that comes your way in this phase. Yes, it is a lot of hard work. It can never substitute success. So you put in those long hours in the first 2-3 years of your legal career. I can assure you that the rewards and the results after that are immense, right? So what do I do? Like, what keeps me going? What drives me? Like, when I do a capital markets transaction, it is obviously a high risk, high liability practice, but the thrill that I get is when I'm driving on the road, you see huge banners and posters saying company X is doing their IPO, launching tomorrow. You open Economic Times, Times of India, or any of these, you will see cutouts of offer documents or advertisements of companies doing an IPO. That gives me a thrill. That gives me a thrill to be part of, because I've been part of a lot of these companies which have done IPOs or global listings, so on and so forth. Just to be a small part of some of these transactions gives me the thrill. Just to understand the different business aspects of companies, different sectors, how companies operate. What do companies do today to earn money? How are they profitable? How are they growing? What does it take for young entrepreneurs to get into startups? How do these startups grow? Literally 4-5 years, startups go for an IPO. Historically, companies would be at least 20-30 years into the business, well-oiled engine. Then they start thinking of an IPO. But that trend has changed. Mama, the IPO I did, they were all 5 years old, 6 years old when they started the IPO, and they are a very successful listed company today, right? I don't think just being in the business for 20 years, 30 years makes a difference, but the expectation, the demand, the mindset of some of these founders has led to a lot of opportunities for capital markets lawyers and general Indian economy remaining stagnant and growing, right? So what is that you guys should be prepared for as a capital markets lawyer? um, One is obviously great opportunities. Pan India, you see there are literally clear top 4-5 law firms in the country have the largest market share. Obviously, there are a few other law firms who do capital markets as well. But all of us are busy today purely because there is so much activities happening in India, right? So what would I expect you guys to do? What happens in an IPO, right? So what kind of companies want to do an IPO? For starters, you have to be a public limited company. Can a private company do an IPO? The answer is no. You have to convert from a private company to a public limited company. Only then you're eligible to do an IPO, right? That's literally, I'm just going to get to basics. I'm not going to go into specific regulations, and probably I'm sure I will have many more sessions with Shashwat and we can get into specifics later. But the objective of this session is to get you guys to some sense of what you'd have heard IPO, you'd have heard stock markets, you'd have heard, listings and all of that. But what actually happens is what I want to briefly cover today. And then, we can drill into further topics in due course. Companies who are looking to tap markets are companies who are looking at various opportunities. One, they want liquidity. Two, most of the companies today have private equity investors as part of their capital table. Who are private equity investors? These are huge funds, groups who come together, who put in money in various companies, take the money out, that returns get distributed to their fund to external parties, right? So the whole objective of a private equity investor they are sophisticated investors. They are fully aware of the trends. They are aware of the business. They are aware of the sector. Their whole objective is, I will put in 100 rupees and I want to get 500 rupees out of the IPO. So they try to drive the company. They grow with the company. In few years, they get an exit. What do I mean by exit? They reduce their shareholding in the company. They sell their shares in the company and get an exit. And one of the most popular modes of exit in India today is IPO. Why is that? The reason for that, like I briefly mentioned, is Indian markets are very active. Indian economy is stable. The money, the 100 rupees that they put in today, they're able to demand 500 rupees exit or even 1,000. There are multiples are 5 times, 10 times for the money they put into the company. Who would not want to do an IPO in this market, right? So there are companies who are thinking 2-3 years from now, I will do an IPO. They have accelerated the process and they've started an IPO today. Purely because the Indian market has the appetite. There's a lot of foreign money coming into the company. FII is investing. Why is so much foreign money coming into the company? For the same reason. The returns that they're getting for the investment is so much higher. The same returns you're not getting in a US market, in a European market, or even an Asian market, right? So that makes the Indian market very active, robust, and attractive. Now, in an IPO process, I would break it into 3 phases. Stage 1 is companies preparing for an IPO, companies getting their house in order. What I mean by house in order is you need to have a functional teams of secretarial, finance, legal, board, all of that ready for an IPO. And then the first stage is what you call as the draft red herring prospectus, the DRHP, right? How long does it take typically for a company to file the DRHP? In my assessment, it could be as low as 2 months, 3 months, or as much as even a year. It all boils down to how prepared the company is. Do they have a bandwidth of people to assist on this? Do they have the relevant documents to share with us? Because please be mindful, securities law is a very, very liability-driven practice. Because even if you make small mistakes in an offer document, the board of directors of the company are liable. And these liabilities are in significant in terms of criminal liability, significant in terms of civil liability. Most important is reputational damage. Once your image is out there and there are mistakes and investors are losing money, you can be rest assured your capital markets journey is dead, right? In a private equity transaction, in an M&A transaction, I would literally sit across the door, in a closed door, sit across the table with investors, negotiate, enter into an agreement and go ahead. But IPO is a different ball game. Public investors are brutal. Today, you might think you're doing so well. Private equity investors are putting money into your company. But if your fundamentals are not good, if you're not able to maintain if you don't promise what you preach, if you don't deliver what you want to achieve through an IPO, public markets will just kill you, right? So for you to get to that phase, we as lawyers, I'm calling all of you as lawyers already, right? We as lawyers play a significant role in this. We assist companies on drafting what is called as an offer document. We should take a lot of pride in doing it. I do take a lot of pride in doing what I'm doing today, because we are actually helping companies file an offer document with the regulator. We're helping companies reach to a larger pool of investors, obviously tap investors, including your public investors, / the retail investors, because the regulators today cares only about the retail investors who are public shareholders like you and I. SEBI's as a watchdog, as a regulator today, their whole objective is to ensure public investors are not duped, because there used to be this concept of fly-by-night operators where historically promoters would just get the IPO done, sell their stake after IPO and run away. So there's nobody there. In light of which there are a lot of these concepts of lock-in, promoter contribution, staying invested for a longer period. All of these concepts, theories have evolved over a period of time purely to address some of these challenges SEBI has seen. Then comes an era of all your new age companies. You had the Paytms, the Nykas, the Policy Bazaars of the world, all doing a list of all new age tech companies doing an IPO in the era of 2021, 2022. Again, most of these companies, IPO price, whatever was pegged at, the prices started dropping. What led to that? All 9 out of 10 companies of these which listed around that time were non-profitable. The basic theory from a layman's perspective, one, you're saying the valuation of the company is just growing every time an investor comes in, but the company is not even profitable. How does that even make sense? Like, if I'm an investor, I want to put in money into, say, a Paytm or a Nykaa tomorrow. If they are just burning cash, if they are loss making, what returns am I getting? Why would I even want to put in money into that company? But the theory behind this is valuation is a different ball game. Valuation means it has different parameters of how you value a company. It could be assets. It could be intangible in terms of knowledge, technology, so on and so forth, right? So there are various parameters. Not getting into valuation today, that's a different conversation. But what I'm trying to drive home is the mindset of people who are looking to go public are looking for a situation that today might not be profitable. Few years from now, because of the growth story, because of how many investors I have on the cap table, we will definitely get to a road to profitability. Now, regulators' mindset is exactly that. They are not going to allow loss-making companies to go public unless the story is so clear that the Make in India concept works. Like, for example, I did Ola Electric IPO. They are also loss-making. But then it's the first EV company to do an IPO in India, right? It's a company where it has its own manufacturing plant in Krishnagiri in Tamil Nadu. Everything is here. We are not relying on China. We are not relying on the US for any of the products. So the market was very gung-ho about Ola because of the fact that it's the first EV company to list in a country. It will open up for many more companies. Now, Ather Energy, which is also an electric company, EV company, they've also filed an offer document. They're also going to go public very soon. So what I'm getting at is if you're able to come up with a product which is catering to a larger community, including retail investors, it opens up for many more companies in the same space. It opens up for lawyers like us to, diversify our expertise on different sectors and understand the business. What does it take for an EV company to make money? How do they make money? Because as capital markets lawyers, please be mindful that you're not just learning the law. You're advising your clients from a business aspect. You're advising your clients from a commercial aspect. You're, of course, advising your client from a legal aspect as well. Because what you're telling the clients is, what is the regulatory risk? What is non-compliance under Companies Act? With certain non-compliances, will that pass muster with SEBI? Is SEBI going to clear your offer document? That is where we come in. So we play a significant role in guiding the company on ensuring the disclosures in an offer document are true, fair, and accurate. Right? As capital markets lawyers, that is our sole responsibility. Our objective of diligence is finding risks. Every agreement that you lay your hands on, you will read that agreement from the point of view of what kind of risks are there. What are the different kinds of agreements you read? You look at loan documents, loans company has taken. You look at contracts. What kind of contracts have I entered into? What are the obligations does the company have? Have they complied with all the terms and conditions of the contracts? If they don't comply with it, what are the legal consequences? What are the penal consequences? So it gives you an opportunity to be an all-rounder in terms of thinking various aspects. You're not straight-jacketed to say, okay, I will just read this agreement. I will just understand what this is. I will just summarize this agreement, put it in a document. My job is done. No, that's not what capital market lawyers do. Because the market perception today, unfortunately, is capital markets, project finance is just intense. People are just working 12, 15, 16 hours a day. I don't want to do this. Please get out of that misnomer. That is not true. Because if I have done this for 17 years, all of you on this call can do better than what I've done. Right? So it's a mindset people should appreciate, that you guys will actually doing good 2-3 years of capital markets. You will be an all-rounded lawyer, because what all do we cover? We cover Companies Act. We cover SEBI regulations. We cover FEMA. You cover RPI. If you're a defense company, you get into defense laws. If you're an insurance company, you look at what are IRDA regulations, because it's an ocean literally. The kind of learning that you can actually have in just 2 to 3 years is immense, especially in a market like this, where all of us are struggling with bandwidth because there are so many IPOs in India today. It's just galore. You opportunities, if you literally put your head down, understand the concepts, understand the basics, learn properly, in 2-3 years, I can assure you, you guys will be wonderful, well-rounded lawyers. Right? So what capital markets actually does is gives you that opportunity to deepen your understanding of multiple aspects in the legal world. Right? Now, coming to capital markets, coming to specifically on the IPO process, the first stage is you file what is called as the DRHP. Between the time the company is actually kicked off for an IPO to DRHP, like I said, it takes sometimes somewhere about 3 to 4 months, realistically. Now, what all goes through that phase? There are different parties in an IPO. We are lawyers. You have 2-3 sets of lawyers. One set of lawyers advising the board and the company. Then you have a different set of lawyers advising the merchant bankers. Who is a merchant banker? It's commonly called as BRLM, Book Running Lead Managers. These managers are SEBI registered. They need to have license from SEBI, your regulator. For them to file an offer document with the regulator, they have their own checks and balances. They have their highest compliance standards which they need to meet. Otherwise, I'm sure you guys would have read in various articles, a lot of banks have started getting notices from the regulator because they believe the diligence standards followed by the companies or the banks are not up to the mark. Please be mindful, we are catching up with the global standards of the US and the UK today. Whatever the regulators expect there, Indian markets are there or sometimes even above that, right? So That is the job of a watchdog. You want to ensure that the right processes are followed, all disclosures are made in an offer document, and who's responsible for that? The merchant bankers are answerable to SEBI. We as lawyers guide the merchant bankers to ensure they're able to file the offer document with the regulator. Right? Our job is to ensure the framework of SEBI has been complied with by all companies going for an IPO, and all disclosures have been made in an offer document, basis which the merchant bankers file what is called as a due diligence certificate with SEBI, and then they file the offer document. Now, to spend a minute or two on the intermediaries, who are the intermediaries in an IPO? You have company, you have lawyers, you have auditors, you have merchant bankers, you have a registrar, you have ad agencies, you have a monitoring agency. So there are different intermediaries. We all come together to get one company listed on the stock exchanges. The objective for all of us, all of these third parties or advisors, is to ensure that the company goes public in the right way, right? So in the step, I'll probably stop here. If people have any questions, I'll probably couple of minutes I can take questions now. And mind you, no question is a bad question. I'm not going to judge you. Shashwat is not going to judge you. He might probably scold you tomorrow saying, I already taught you this, how come you didn't know? But I leave that for Shashwat to deal with. But at this stage, please ask questions. Stay hungry, stay foolish. Otherwise, you will not learn. Don't think that, oh, so many people are on the call. What if my question is stupid? Feel free. Yeah,
Kshitij,
go ahead. Yeah, Shashwat.
go ahead.
Samaya? Yeah. A very good morning, sir, and thank you so much for such great insights. Sir, you mentioned that if there are like certain mistakes in the offer document, then almost the capital journey of that company comes to an end. So, are there any opportunities with these companies if they can rectify the errors before like they can officially go public?
Sure. No, good question. See, what I meant was, of course, they can go public. There is no, it's not like the doors are shut. In some cases, SEBI has come back and said, for the next 1 year, you can't raise capital markets. You can come back after that. So it depends on the gravity of the mistake. It depends on what kind of issues are there in disclosures, what kind of issues investors have suffered, burnt their fingers because of wrong disclosures, right? So if you've already listed, there are penal consequences under the SEBI framework. But if you're a company where you filed the offer document and SEBI has returned your offer document because of non-compliances, you of course have an opportunity to fix those non-compliances, again go back and file the offer document. There's no restriction per se. I hope that answered your question.
Thank you so much, sir.
Yeah. Chirag?
Hello, sir. I'm Chirag from NLU Jodhpur. I was working on green shoe options in my law for corporate finance subject, and I was just wondering if you could give us a specific example as to. I was just wondering how price stabilization comes into picture, and how lawyers' role comes into picture when we are looking at a post-listing price stabilization and green shoe options, and how that clause would be like.
Perfect. Why don't you hold your thoughts? Once I finish the IPO journey fully, what is the green shoe option? I will come, but I'm going to ask you again, what is your understanding of green shoe? But just hold your thoughts for now. I'll take one more question and then I'm going to resume. Sakshi?
Yes, sir. So you spoke about a loss-making company qualifying for an IPO. So can you tell a little bit more about how a lawyer comes into role, because our role is restricted to the prospectus only. So how can you help a company in qualifying even after their loss making?
It's not our job. Thankfully, we don't do that. What we do is identify, under the SEBI framework, there are two eligibilities under Regulation 6.1 and 6.2. If you're a profitable company, you are eligible to do an IPO under 6.1. If you're not a profitable company, you're still eligible to do an IPO under 6.2. The only point to drive home is who participates in an IPO. There are three kinds of investors. You have qualified institutional buyers, you have retail investors, you have high net worth individuals. These are the three categories of individuals who participate in an IPO. In a profitable company, the split is 50% QIBs, 35% retail, 10% HNIs. In a loss-making company, 75% has to be participated by QIBs, 10% by retail, and balance by HNI. So for as lawyers, the only point to note to advise your clients is to give them the distinction of what kind of appetite investors will have in terms of percentage. But fortunately or unfortunately, we can't help company get profitable. They have to do what they have to do in terms of business, right? So our job is only to guide them to say what kind of challenges they have if it's a loss-making company, because there are certain other nuances in terms of offer for sale participation. If you're a loss-making, there are some percentage thresholds. There are a few other thresholds for loss-making companies, which probably I will cover in a separate session. But as lawyers, there's nothing much for us to do other than just guide the company that whether you're a profitable or a loss-making company. Okay, so I'll just quickly resume from where we left. So we are at DRHP still, right? So I appointed all the intermediaries. We've started diligence. What happens from day zero till filing of DRHP? Diligence, as lawyers, we will get into detailed diligence about the company, about the history of the company, their capital build-up. Have they filed all forms from incorporation till date? Do they have records of all their board and shareholder minutes? Do they have all the statutory registers under the Companies Act? What kind of record keeping they have done? That is one part of exercise we get started. Who are the promoters? Are they 1, 2, 10? There is another concept called founders. Are promoters founders? Are they different terms? How does the regulator look at it? We guide them on that. Then you have, like I mentioned, loans. What kind of loan portfolio the company has? They have short-term loans, long-term loans, working capital loans, line of credit. These are all terms you would have heard, but you will actually put this into practice when you actually start diligencing these documents, because what that gives you a sense is, if it's a capital intensive company, like a manufacturing company, to set up a manufacturing cost plant, companies have to incur huge capital. They put in hundreds of crores to set up a huge manufacturing plant. Where do they get the money? They borrow loans. Promoters will pump in only X amount of money. Private equity investors will only pump in X amount of money. But you will still need a lot of capital for a capital intensive company. So you take loans. So for a company which is in the manufacturing space, company which is an NBFC. What is an NBFC? Non-banking financial company. All they do is they borrow loans, they give it to somebody else. I take money from the bank, I lend it to people like you and smaller businesses and so on and so forth. How do I make money? I charge a higher interest. Simple story, right? So for NBFCs, when you're doing diligence for an NBFC company, they'll have tons of loans. They'll have 50, 60, 100 lenders loans, because their whole business model is borrowing loans. So as lawyers, we look at documents, we look at loan documents to understand the business, to see why have they taken so much loans. So this opens up your commercial thinking, because you're not bookish. You're not just thinking, okay, I just have to read the loan document, right? Then you look at litigation. What kind of litigation a company can have? Could be civil, it could be consumer, it could be criminal, it could be tax, it could be enforcement directorate, regulatory authorities after you, income tax raids have happened. Enforcement directorate is checking if you've done the necessary tax filings. So there are various things which comes under the umbrella of litigation. Again, as lawyers, the perception for companies is, Hacha, lawyer ko le liya, he will only look at litigation. No, that is just a drop in the ocean for us. We look at various things. Litigation is just a small part of it, right? So diligencing on each of, so this helps you to understand, what you might have done litigation internships. You would have visited smaller courts, you would have visited district courts, high courts, so on and so forth. What they actually do, what kind of petitions are filed, what kind of suits are filed, you're actually diligencing all of those as a capital markets lawyer, right? So then you arrive at what is material from this, how those litigations can have an impact on the company doing an IPO. That is where we come into the picture, right? So that's one part of diligence. So different facets of diligence that we spend time on as lawyers. We help draft what is called as the offer document, right? The bankers will give their inputs, company will give their inputs, the statutory auditors will do financial diligence. As lawyers, we don't do financial diligence, right? Profit and loss, balance sheet, cash flows. Rishabh, I'll answer your question in the end. Why don't you hold on? All of these are, each of us have different roles. Like auditors have their own set of roles. As lawyers, we have our own set of roles. So they all come together, right? So I'm saying auditors have to give their report on the financial statements. Lawyers, we don't give reports. We don't issue diligence reports. All our diligence findings are reflected in the offer document itself. In whatever diligence that you do, whatever issues that we find, they are all reflected in the offer document, because a public investor should make an informed decision before he buys your stock. So he is buying your stock based on the disclosures that are made in an offer document, nothing else. So you want to ensure that you're guiding the company to ensure all true, fair disclosures are there, good or bad. You're not going to, please be mindful, an offer document can't contain only the good things of a company. It must contain bad things as well, because that's when an investor can ensure whether he wants to put in money in that company, right? That doesn't mean you just write anything and everything about the company. We'll have to gauge materiality of the risks, and we make adequate disclosures in an offer document, right? So there are various agreements that gets executed during the phase of the IPO. There are various certifications issued by various parties during the life of IPO, right? So all of these happen in the first phase called as the DRHP. So the company, once the diligence is done, once the offer document is drafted, you file what is called as the DRHP with SEBI. So step one happens there. Once you file the DRHP, the regulator takes anywhere between 3 months, 2.5 to 3 months, sometimes more, to clear the offer document. What does SEBI do once you file the offer document, right? SEBI reviews, literally they have different teams internally. They review your offer document. They literally read every page of your offer document and they start asking questions. In the recent trend, even the stock exchanges have started asking a lot of questions. So once you file with SEBI, you also file what is called as an in-principle application with the stock exchanges. What am I applying for? I'm applying to the stock exchanges to say, I need your in-principle approval for me to list my shares on your exchanges. So as you're all aware, the most common exchanges are your NSE and BSE. Most of the companies list on these exchanges only. Obviously, there are a few regional exchanges as well, but they are not actively traded. Your most active exchanges are, say, NSE and BSE, right? So you file the offer document at SEBI. You file what is called as an in-principle application with the stock exchanges. There are checklists. Exchanges also ask you a set of questions, basis which you respond to SEBI. It's literally Q&A happening between SEBI and the company. They ask you questions based on disclosures in the offer document. As lawyers, again, we reply to some of these questions what the regulator asks. We guide them saying how we should respond. Basis our experience, we can guide the company saying some of these questions are standard. You get this in all offer documents. Some of these are business specific. So we, along with the bankers and the lawyers, guide the company on responding to these regulations of the SEBI. Once you confirm or respond to all of these changes, SEBI gives you an in-principle approval to go ahead. So step one, you file DRHP. SEBI issues comments on the offer document. Then you go back to SEBI and file what is called as a UDRHP, updated draft red herring prospectus. You're telling SEBI, here is the version I filed as DRHP. Here is the version of what is called as the UDRHP. All changes made in the offer document have been duly complied with. All comments that you gave us, I have incorporated all those comments. Look at my UDRHP. Right? You file what is called as a UDRHP with SEBI. SEBI takes few days to clear that. And once that clearance happens, you are out of SEBI's purview. SEBI has actually given you permission to go ahead and launch the IPO. Now, Probably Sitish, to answer your questions, if SEBI had concerns on your DRHP, they would have returned the offer document back to you and said, look, it doesn't meet the requirements of disclosures. I will not let you go ahead to the IPO. At that stage, they can return your offer document because you've officially filed your DRHP for regulators review and sign off. At that stage, they can return. That return can come with conditions. Conditions could be you comply with all of this and come back, or it could give you, if they believe that the issues are so grave, they can say you can't tap capital markets for the next 1 year, 2 years, as the case may be. Right? So then you file the DRHP, you file the UDRHP. Once UDRHP is filed, you actually, the third step is you file what is called as the red herring prospectus. Because the draft is over. SEBI has cleared the draft document. You file what is called as an RHP. RHP is the document by virtue of which all investors are supposed to subscribe to in the IPO. RHP is the marketing document. Now, let's go back to basics. Let's play contract law. Under Indian contract, you have invitation to offer, you have offer, you have acceptance. Now, can any of you guess in an IPO journey, how do these three phases come in? When is it an invitation to offer? When does offer happen? When does acceptance happen? One of you, go ahead.
Janvi?
Right. So the prospectus itself is an invitation to offer, and it basically invites investors to like bid for their shares. So that bidding process from the investor side is offer, and when the allotment is done based on the price that is set by the merchant bankers or something, then that would be acceptance.
Good. Almost there. Yeah, so the RHP, like I said, you file the RHP, you're inviting public to say, I am launching my IPO. Please refer my red herring prospectus for all information about my IPO and come and subscribe. So your RHP is your invitation to offer. Now, basis my RHP, after you file the RHP, your issue opens. Like I was mentioning, the banner, you will see huge cutouts on roads, newspapers, journals where you're saying company A will open their IPO on November 1st till November 3rd. You will see those cutouts everywhere, right? That is when the actual IPO is open for subscription for the three categories of investors we spoke about. They will all put in money in those 3-4 days, right? Once that happens, I will have thousands and lakhs of applications as company. You receive so many applications, right? Who do you allot shares to? In an IPO, what is the process that's followed? It's called a book building process. A simple mechanism is you collect all the applications. So you have a registrar. The role of a registrar in an IPO is to screen some of these applications, right? What happens is there could be a lot of rejections. Fraudulent investors. I will use fake PAN numbers, multiple PAN numbers, and try to get more shares. Now, thankfully, the system is a bit more savvy. A lot of these fraudulent investors don't even get shares, right? Although there are ways and means of how people do play their tricks, leaving that aside. But the process is, once you file your RHP, once you open the issue, the offer is open for subscription for 3 days. 1 day prior to subscription is called as an anchor investor. I'll get to that separately. It's a bit technical. I'll deal with that separately. So issue opens and closes. After the closure of issue, you have all the applications. You do what is called as basis of allocation, basis of allotment. For the thousands and lakhs of applications I have got, company along with merchant bankers do what is called as a proportionate allocation of shares, right? So that happens when, if assuming I have put in money in Ola's IPO, how do I know that I have actually got shares? There is something called as a CAN, confirmation allocation note. Once I receive that, I know that I've got 10 shares today. Whatever money I put in the IPO, I've been allocated 10 shares in the IPO. That is when the contract is complete. So you've had RHP, which is the invitation, your application to participate is the offer, my acceptance by giving the can is the closure of a contract. Right? Now, let's continue. We have not done still. What happens is you file RHP, issue opens and closes, you do the book building process, you allocate shares to people. Under law, from the time the issue is closed, after 3 days, the shares have to be listed on the stock exchanges. Historically, it used to be 15 days. It got reduced to 12, got reduced to 6. Now it has got reduced to 3 days. What that means is how the SEBI process has improved, how technology is improved. Even though you get lakhs and lakhs of applications, they're able to shorten the process of getting public money back to people who have not got shares or allocating shares. So that, why is that needed in a faster time? You must appreciate there are lakhs and crores of money which is put into the IPO market. That money is stuck for 15 days or 12 days or number of days. Imagine the interest that you're losing for the number of days on the whole. So one of the objectives is to try and see how soon we can shorten the IPO process so that public money is not held in an escrow or in ASBA or in the bank for longer period. We're able to quickly refund in cases where shares are not allotted. We're able to take the money, allot shares where people have got shares, right? So once you issue closes, the next day after issue closing happens, you will arrive at what is called as the final IPO price, right? At RHP, when you file the RHP, you're only telling the world that I have what is called as a price band. Price band is a range. You're telling the world my stock is going to list open for subscription on November 1st. My price is going to be between 100 to 105. You're giving a direction to shareholders or public shareholders that you can put in your money at 100, at 101, 102, 3, 4, 5. You have a range, right? Now, when the book building happens, as a company, based on the number of applications I get, number of the appetite, I will discuss with the merchant bankers and say whether I want to finally arrive at the IPO price at either 102, 103 or 105. So after the book building process is done, after the basis of allocation is done, I file the last document called as the prospectus. So you file DRHP, you file UDRHP, you filed RHP, you opened the issue, you've closed your issue, money has come in, then you file what is called as the prospectus, right? Prospectus will have your final issue price. Prospectus will say what is the allocation, 50% QIBs, 35% retail, how is the allocation happen? If there is a shortfall in one bucket, oversubscription from the other bucket can happen. So all of that gets reflected in your prospectus. 2 days after, the next day, the second day after prospectus is filed, you again go back to stock exchanges and say, hey, I came to you after DRHP to seek in principle approval. Now I'm coming to you for the last time. Please give me what is called as a list approval. 1 day prior to listing, you get what is called as a listing approval from the stock exchanges. And then the next morning at 10 a.m., you as capital markets lawyers tomorrow, you will get to go to the stock exchanges. You will get to see the company ringing the bell. So that's when at 10 o'clock that morning, the shares of the company gets listed on the stock exchanges and then it's traded. Right? That's in a nutshell what happens in an IPO. From diligence to kickoff to the various stages, that's the life of an IPO. Now, one specific nuance is if your issue is not subscribed 90%, IPO fails. Meaning, out of 100 shares you're issuing, even if 90 shares are not subscribed, IPO has failed. That is the SEBI expectation today. There's another concept called underwriting, which the merchant bankers are supposed to do. In my experience, I think in India, you don't see underwriting. I think there's one deal a couple of years back, there was an underwriting done. A couple of bankers were involved in that, who did the underwriting. But underwriting, There is, again, getting into specifics, there is something called as a hard underwriting, something called as a soft underwriting. Hard underwriting is at the beginning of the deal. I as a merchant banker, I'll tell the company, irrespective of appetite, irrespective of how many investors coming, I will assure you that I will sell the IPO. So I'm giving a upfront confirmation commitment that the IPO is sold. That is hard underwriting. It is not a concept that is relevant in India. Soft underwriting is what happens theoretically in India, right? Which is, for whatever reason, some of the applications, some of the investors I as a merchant banker brings, if those applications are rejected because of insufficiency of funds, and if the subscription has gone below 90 because of those applications I have got, the merchant banker is supposed to make good that loss, is supposed to underwrite that portion and ensure the company goes above 90%. That's the broad concept of underwriting, but we'll get into all of those details, specifics separately. But in a nutshell, that's what happens from incorporation till listing. Once you're listed, obviously, your shares are traded on the stock exchanges. Yeah, that's broadly what an IPO journey is. Obviously, I can keep talking all days because there are so many aspects in an IPO. There are so many, what we do, get into the different diligence standards. What is the expectation from us? What do bankers do? What are the various agreements? How do we do diligence? We can do multiple sessions on that. Probably that's for a conversation later. I can probably again take some more questions now. Yeah, please go ahead. One after the other.
Indranil?
Yeah, hi. So thank you so much for the session. I just wanted to ask, like, as you mentioned that there are multiple agreements which we execute during the whole deal process. Can you
Yeah.
please let that at which stage we execute which agreement?
Sure.
That-
Sure. So at the DRHP stage, there is what is called as a register agreement. There is what is called as an offer agreement. This is one of the most important agreements in an IPO because the roles and responsibilities of the merchant bankers, the various representations and warranties which are given by the company to the banks gets captured in this agreement. It's called as an offer agreement, right? That gets executed. Then you have what is called as an ad agency agreement. You appoint an ad agency who will come up with all these advertisements and cutouts which is needed for an IPO, right? So these three agreements gets executed prior to DRHP. Prior to UDRHP, technically there is no requirement to get any agreements executed because UDRHP is just a confidential filing with SEBI. It's not a public document. But prior to RHP, you need to have the escrow agreement, share escrow, cash escrow, syndicate agreement, monitoring agency agreement. Monitoring agency is a guy who gets appointed, the credit rating agency. They have to monitor IPO money. They want to ensure whatever money you use from IPO proceeds are monitored and ensure they've been used for the purpose that you have sought for in an IPO, right? All of these agreements gets executed prior to RHP. The only agreement that gets executed on the date of prospectus is the underwriting agreement. Okay, these are the broad sequence of agreements that gets executed during the life of the IPO.
Thank you, sir.
Hi, sir. So
Green
to
shoe.
answer,
Yes. Sorry, Chirag, green shoe. I missed that.
yes.
Okay, what is
So-
your understanding of green shoe?
So from my understanding is, there is so when an IPO is released, there is obviously high demand. So since there is speculation, a lot of people are going to go for this, and there will be a surge in demand. So what this will do is that the price will increase. So to stabilize this price, I feel there's a clause which says that there can be a 15% or whatever the clause says that above what the allotment should be, they can over allot. Now, my question is, this particular price stabilization would be like a very false stabilization, because this is essentially we are manipulating the market of sorts. And when, like, if the price does go down, then the underwriters are given the ability to like buy the buy the stock from the market as well. What I am trying to understand is, like, what essentially, like, how do they make the decision that this is required?
Okay.
And
I'll probably stop you there, Chirag. Sorry. I think you've got it mixed. Not all of it, what you said is right. Green shoe option, simply put, is a price stabilization mechanism, but it does not manipulate the market. It is not supposed to manipulate the market. Then why will a regulator allow a stock or a market manipulation mechanism under the SEBI framework? Right? It is not a manipulation mechanism for starters. What green shoe does is actually the opposite of what you said, which is, for whatever reason, there is completely the stocks are going down, not increasing. If the stocks are going down, the promoters enable to bring some stability to the stock price by building a stability mechanism. They reserve a percentage of pool of shares that, in the eventuality of things going south, the stock price going south, they put in those additional shares to bring stability to the stock. It is not a commonly practiced phenomena. You will not see green shoes in most of the IPOs. I think way back in 2009, when I was doing an IPO for a company called Nitesh Estates, a real estate company based out of Bangalore, they exercise green shoe, but far and few. Today, you will not have that situation because the companies, the merchant bankers are already doing their jobs to ensure that there is enough appetite for your stock. They will ensure that, we don't go through this phase. Although, when I did the Star Health IPO, that almost happened. The company was not fully subscribed. It was an IPO. If you go read articles, I don't know how much is in the public domain, but the subscription was between 90 to 100%. So while it was a massive IPO, you had Westbridge, you had Rakesh Jhunjhunwala, a lot of big names who was part of the cap table, but it was not a successful IPO. They had a situation where they overpriced the stock. The market appetite was not there for that price. So it immediately fell after the IPO, and the subscription also was very, very close to minimum subscription. So it was touch and go IPO. But yeah, that's broadly what the concept of green shoes.
okay, sir. So essentially, when there's a touch and go IPO, this is when green shoe can be exercised so that the market appetite increases. Okay.
That's correct.
Thank you, sir.
No problem.
Okay.
I can take one more.
Yeah,
take
so
one more,
Kathy, one last question, please.
Yeah. Kayati Rajput, yeah, please go ahead.
Okay. I think there's a problem with the network. So Kathy, you can write to me separately. I'll figure it out. Okay. So, okay, I think we've crossed time.
Super, no problem. We'll probably, like I said, if you have any questions, you can pull them together, and happy to respond to it at a future point in time, Shashwat.
Perfect. So thanks a lot for the session today, Vijay. I think it was much needed. It was a refresher for me also, actually. It's been a while that I've gone through the entire process, but I think for the students here, it was a great session, and hopefully going forward, we'll obviously be in touch for other matters, but for other sessions also, let's just plan our way ahead.
Absolutely. Thank you for this opportunity. Good luck to all of you guys. Like I said, stay hungry, stay foolish. Make the most of your college time. Obviously, that's a golden period in your life. But be open to learning. Don't get shortchanged from what some of your friends or colleagues who've joined tell you, and shortchange you say, because they'll have a different mindset. Have an open mindset when you look at whichever practice that you want to do. The intention should be learning. Intention should be, put in your best effort, put in that hard work. As long as you have that right mindset, I'm sure any practice that you guys choose, you'll flourish.
Great.
Actually, one of your, Shashwat, if you don't mind, there's someone who wanted to just say hi. Is that okay with you?
Yeah.
Okay, I'm just calling. He's one of your students.
Okay. Oja.
Yes. Oja was yesterday. He's so excited. He said, I want to come in and say hi. Where are you? Oh, okay. No worries. No, I was just introducing you to Shashwat. I want to know if you want to come and say hi, but anyway, okay, next time. Okay, bye. He's on a call. See, this
No
is what
problem.
lawyers do. Huh? Anyway, great. Thank you, guys.
Perfect. Thanks a
Good to
lot,
connect with
Vijay.
all of you. Pleasure. Take care. Have a good day.
Thanks a lot.
Bye.
Bye.